I still remember staring at my laptop at 2:14 a.m., half a cold burrito in my hand, wondering if I had just committed financial suicide without realizing it. My bank account said $1,142.63. My tax bill said $9,800. And right when I thought things couldn't get worse, my accountant texted me. "We need to talk. The IRS flagged your freelance deductions." That was the moment I realized I had been losing money as a freelancer without even noticing. But what I discovered next didn't just save me, it completely changed how I survive freelancing in America. And honestly, I wish someone had told me this before everything almost collapsed. I'm a freelance video editor, living in a tiny one-bedroom apartment somewhere in the US, where rent costs more than my mental stability. At the time, I was making between $3,000 to $6,000 a month, which sounds good until you realize income is unstable, clients pay late, taxes are your responsibility, and no one teaches you anything. I thought I was doing fine. Spoiler alert, I was not. I had 14 tabs open of unpaid invoices, a coffee addiction strong enough to qualify as a dependency, and a belief that taxes were future me's problem. Future me was about to get destroyed. It started when I got my first real freelancer success month, $7,200 in revenue. I literally felt unstoppable. I went on a spending spree. New chair, new mic, new laptop stand. Productivity snacks that were just cookies in disguise. I told myself, this is business. That's all deductible anyway. I had no idea what that even meant. Then, April came, and so did reality. My tax preparer sent me a document that basically translated to, "Congratulations, you owe money you don't have." I laughed first. Then I didn't laugh again for 3 days. I remember sitting in my kitchen, calculator open, whispering, "Wait, why am I paying this much?" Then I realized something horrifying. I had barely used any tax write-offs. I was literally paying more tax than I needed to because I didn't understand freelance deductions. That's when my accountant said the sentence that changed everything. You're missing at least 17 major write-offs. 17. I thought he was joking. He was not. And that's where everything spiraled into the most chaotic financial education arc of my life. The first category blew my mind. 1. Home office deduction. My office was literally a desk shoved next to my bed. Apparently, that counts. I just sat there thinking, so my depression corner is tax deductible? 2. Internet bill? I had been paying $80 a month for Wi-Fi for years, never deducted it once. Pain. Software subscriptions? Adobe, Final Cut alternatives, AI tools? All deductible. I was basically funding the economy for no reason. Phone usage? My phone was 70% client chaos. Calls, texts, where's the file messages at midnight, and I never counted it. Equipment purchases? My expensive mic? Deductible. My chair that betrayed my back? Deductible. My regret? Not deductible. At this point, I was already mentally screaming. How did no one teach me this? But then everything changed. My accountant paused on a call and said, "There's something else. You may want to sit down for this." My stomach dropped. He continued, "You didn't just miss deductions. You may have triggered a red flag." I froze. IRS. Flagged. Freelancer. Those words should never appear in the same sentence. For 3 days, I couldn't focus. Every email notification felt like an attack. Then finally, the letter came. I opened it expecting disaster. Instead, it said,
Please verify your business expenses. That was it. Not jail, not fines, just verification. But I knew I had to fix everything immediately. That's when I went deep into the final write-offs. 13. Retirement contributions. I was basically penalizing myself for not planning ahead. 14. Health insurance premiums. Painfully expensive. Shockingly deductible. 15. Business liability insurance. I didn't even know freelancers had insurance. 16. Professional services. My accountant himself was deductible, which felt like paying him to reduce the bill he created. 17. Depreciation. My laptop slowly losing value was actually a tax strategy, not just emotional damage. At this point, I just leaned back and said, "So I've been losing money professionally?" After correcting everything, I reduced my tax bill by $11,482, reorganized my entire freelance system, set up quarterly taxes, built actual bookkeeping habits. But more importantly, I stopped freelancing blindly. I realized freelancing isn't just about earning money. It's about not losing it silently. Now, every time I buy something for work, I don't feel stress. I feel aware. Sometimes I still think about that 2:14 a.m. moment. Me, confused, broke, holding a burrito. If I had known these write-offs earlier, I wouldn't have learned the hard way. But maybe that's the freelancer experience. You don't just build income, you survive mistakes until you stop making them. And honestly, I still wonder how many freelancers out there are paying way more taxes than they should, without even knowing it.